Okay, guys, so we're going to be looking at the same concepts now of the previous video in current price action here on EU. Okay, so from the top here, we've had failure to follow through here, pushes down, breaks down. We have an FEG here. We can see that this FEG is tapped into, let me see, the low of this candle. If you look up here at the left, you can see open, high, low, and close prices. If you don't have this on your chart, you can go to the settings, status line, OHLC values, turn that on. And if we look at the low of this candle, or of this one, sorry, the one that's number 3 of the FEG formation, you can see the low is 12043, and the low of the following candle is 12035. So this candle does in fact tap into this FEG and then fails to produce a new high. Price then breaks down, has another chance, comes into the 50% of this FEG here, pushes up, then comes crashing down. Structure lies here to here. But we are not structured traders. We are order flow traders and liquidity traders. So what we look for is narrative switching. Okay, and the market structure is not narrative. Market structure does not even compare to narrative. And I think we've seen that and we've proved it over the last couple of months. Now, bearish FEG here, closing over this one. This one's clearly failed to do its job, leaving the footprint behind. So when we come into this FEG, we're looking to short the entry into the bear minimum, the break of the previous daily low, or to some form of area that can cause a resistance, for example, an old high, or the bottom of the imbalance range, which is usually where I target here. This candle here pushes up again, takes out this high. Again, if we're bearish here, we'd be looking to fade this move. Okay, pushes down here, sweep of a swing high, looking to fade this move because we're bearish. Comes and takes out the low here as well. Takes out the low, pushes up, takes the swing high. We're looking to fade this move. Now, you may not always know for sure whether you want to fade the move, and you don't have to be the first guy involved, and that's the beauty of the Oracle trading system, is we're able to track order flow and get in on the leg as it develops. And now what we're going to do here is look at this leg here and see how we can get involved, or how we could have gotten involved today on September the 1st, 2023. So we have the old previous swing high. We'll call it PDH. I still call it a PDH, but you can call it a PDSH, right? Previous daily swing high, yes. PDSH. Okay, so we've swept above the previous daily swing high here. Failure to close above. And then the following candle pushes down, bearish, and closes below this candle. It comes into an FEG. Now, what we can expect here is a pullback, but we do not have to look for a full reversal just because it taps into an FEG. If our overall narrative is bearish, we're going to look for it to act as a cause for pullback. So a cause for pullback, or a CPB, this simply means that it can give us a reaction, but we are not, and it may be a tradable reaction, but we're not looking for this to be a reversal point. We're just looking for it to act as a cause for a pullback. Of course, we don't know in hindsight. We do, but in reality, we don't know, but we have to frame up what the likelihood scenario is, the most likely scenario is in line with our current narrative. And in this case, we see we've taken out the previous daily swing high, failed to close. We've had a bullish reaction out. We're going to look to use this cause for a pullback and then fade it into taking this FEG and then the swing low here. We can also see here that this is the previous weekly high, right? If I go to the weekly, the previous weekly high is swept, taken as liquidity, and we're looking to fade that move. Now, we may not be able to get involved here. We may not be able to get involved here. We may have missed this, no problem. But if we look on the intraday now and we understand where the narrative is and where that higher time frame draw is, which is the PDSH or the previous weekly low, we've taken the previous weekly high, okay? And now we were looking to then take the previous weekly low in this case. So what we would do is we would go in the 4 hour, we would go in the 1 hour, and we would look to build a narrative that's in line with viewing this as the target. Here, we had a reaction to the FEG causing the pullback, manipulation on the sell side, pushes up, comes up, manipulates and takes all of this liquidity out of the range and displaces for the rest of the day leading into the weekend. Let's pay attention here to what's going on. We have FEG here. This FEG is broken through, held as support. We also have breaker, held as support. So many different ways of looking at this current price action right now. We have a breaker that's held as support or as resistance. We have liquidity draw, and we can simply, and this is where our trading system comes into play, we can simply just track the ISPs here. ISP, ISP. We expect to form consistent lower ISPs until we hit our draw on liquidity. So even without looking at all of these different POI types, we can simply follow our system's rules of higher and lower ISPs and next draw or draw and next likely draw on liquidity and see that they're consistently lower heading into this draw on liquidity below at the previous weekly low. Here, takes liquidity, forms a type 1, pushes out, and we'd be looking to then confirm this on a lower time frame, only paying attention to sells to take out this previous weekly low. Here on the 15-minute, see it push up, manipulates, doesn't come above this previous ISP's high, doesn't need to because our system tells us that's how price operates when it is engaged with the next draw. On the 5-minute, after we've had that accumulation, manipulation at news, market open, pushes down, pushes up, doesn't take the high. Does it need to? Absolutely not. It does not matter. It's irrelevant. Relevant, irrelevant, irrelevant. Pushes down, displaces heavy, takes out this low, leaves an FEG behind. FEG is stacked with the previous low. You can look at the entire low, of course, or just this candle. Price comes, retests the old low, retests the FEG, breaks down further. May not get involved in this, right? May not get involved with this, but we see a lower ISP, a breakdown, just wicks. But we can see again, following our rules, we expect consequential order flow when it's in play that we will form lower and lower and lower consecutive ISPs until we hit the sell side draw on liquidity. Lower ISP, sell off. If I pull up our OTE tool, or order flow tracking tool here. You can see push down, another FEG as well. Here, FEG is respected beautifully. Comes into the OTE, into the order block, that last up candle, sells off for the rest of the day. Because we were able to track not only the weekly drawn liquidity, which is down in here, but also understanding where we've come from and that we've had the failure on the daily to close above the previous weekly high, closed bearish strong. So we're looking to get involved in that buy side wick formation to sell off for the rest of the day, leading into the end of the week and potentially to take that drawn liquidity. So this is how we would apply this on not just a daily, weekly, monthly basis, but also keeping that in mind and using it as a framework to build up the narratives of the intraday and to not get caught offside. And this altogether is the culmination that makes our bias building so incredibly accurate. 90% accurate. 90% accurate. And we've seen this consistently, not only in myself, but with you guys in the group that know your stuff very well, how to use this to your advantage and get insane, absolutely insane bias building with nothing but a candlestick chart. Thank you.